This is episode 1122.
But there's also efficiency to be gained. We estimate that we can really increase our development capacity by like 40% using some of this agentic AI platforms. And so investment both on a hardware and a software platform allows us to just come to market with our product roadmap much quicker. And so one, we can do it more efficiently from a cost perspective when we have that horsepower behind us, but we also have speed to market, which gets revenue in the door faster. And so we're taking a very disciplined ROI-based approach to that investment because they're large investments and you need to be prudent about and realistic and hold yourself accountable to the returns that are going to come in the door from those investments.
Hello and welcome. Chris Miorin is with us. From leading an infantry platoon in Iraq to guiding finance teams in corporate America, Chris has learned that relationships are often the most powerful lever for success. He tells us how trust, collaboration, and storytelling with numbers can meaningfully alter outcomes, whether in securing an acquisition, allocating capital, or strengthening partnerships. Join us as Chris shares how the power of relationships continues to drive enterprise value throughout his CFO journey. Our talk with CFO Chris Miorin begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus back to customers in business building rewards. Make every dollar count with Brex.
Hello, today we're joined by Chris Miorin, CFO of Apexanalytix. This is Chris's second CFO chapter. It's one built on a foundation of discipline and leadership that began in the U.S. Army, where he completed, I believe, Ranger School and served 5 years as an infantry officer. Chris, welcome.
Thank you, Jack. Really pleased to be here.
Hey, we're hoping you'll take a look back for us, Chris, and try to identify some of those experiences. We hope you take us back to the Army. It's an unusual chapter we don't always see in a CFO's resume. But hey, take us back. What were those experiences you feel prepared you for this role?
Sure. No, thank you for the question. I mean, yeah, as you can imagine, from my seat today, I would say it is evolved into more of a leadership, strategic partnership role that's underpinned by strong financial principles. But that leadership foundation for me kind of began with that Army experience, and had the distinct pleasure and opportunity to attend West Point, where it's really entered into a kind of crucible of leadership training, and that was kind of even further forged, during Ranger School. And so when I joined the Army, it was pretty close after 9/11. And so I knew I'd be, going into combat when I graduated. And so, operating in an austere environment, I ended up leading an infantry platoon, but spent a lot of my time partnering with an Iraqi Army colonel, who was, kind of 30 years my senior. And so trying to operate in an environment that's not your own, where, it's a lot of things are very fluid, and, trying to effectively, partner with someone who has been doing this a long time and you're the new guy, and trying to establish rapport and that was a great learning experience for me in my early 20s. I certainly learned a lot from that experience. Just understanding, like, how do you add value, and how can you do that in a humble and confident way. And I think that's certainly underpinned a lot of my finance journey. And I would say, kind of as I got out of the Army and transitioned into finance, I really am grateful for that core investment banking foundation that I had. Was able to take a front row seat with, some of the largest oil and gas companies in the world and understand how they are making some of the most impactful decisions in their company's history, whether that be raising capital, buying or selling companies. In that industry, there's a lot of it's a capital intensive industry with lots of risk and cyclicality. So being able to be a banker and understand and assist in that decision making process helped me understand how finance can have that strategic impact on a company's enterprise value. But eventually understood, just kind of discerned that I wanted to be an operator in a business, and serve as that strategic partner to a CEO. And so I had the opportunity to work on an IPO for a company called Gardner Denver, which was owned by KKR at the time, and really, grew to respect their leadership team a lot, and had an opportunity to go work for them in an M&A capacity. And so then, really operating in that corporate development landscape helped me understand the importance of return on capital and making decisions and on a project-based analysis, doing analysis on a project level basis. So say, the CFO's crucial role is just how do you allocate capital to the most ROIC generative projects. And so, M&A is certainly a portion of that, but, being able to be a partner to the CEO and, then eventually communicate it in an investor relations capacity, learning how to tell a story with numbers. The CFO's got to be fully immersed in the business strategy to be able to communicate to the market effectively about, why the business is attractive to investors, how to drive that interest. But I think it all starts with like a returns-based focus on decision making.
Great.
Those kind of four things, the Army, certainly investment banking, corporate development, and then investor relations, I think really prepared me for the seat I'm in today.
Great overview for us, Chris. Thank you for that. I was hoping just to zero in on what I think are some critical decisions that you made along the way. When you move beyond the Army, I think you go back for an MBA, which in this case, it makes such a wonderful sense. Many finance leaders have told us how an MBA helped them sort of bridge a gap or, help them get into a new direction if they, which I think is your case. But can you tell us a little bit about that decision? And again, did it have to be business? Were there other thoughts? You could have gone any number of directions, I imagine.
Yes. It's one of those few points in life where you can have a completely clean slate. But I weighed a number of considerations, whether it was to go work for a company straight out of the Army, whether to go back to school. I really generated an interest in business and, in finance in general. I think just in my own personal, investing endeavors when I was a little bit younger. But I made that decision, and I honestly didn't know what a balance sheet was when I showed up to Northwestern. So it was certainly a opportunity to accelerate the learning curve, and I kind of viewed it as 2 years to really immerse in how businesses run, how to evaluate decision making, how to use in data and information to inform that decision making, and then how to lead organizations well. And so, really grateful for that experience. I feel like culturally for me, Northwestern is a great fit, and have a lot of friends.
Great school. Can you dwell on that a little more too? We've seen Kellogg CFOs before. Why Kellogg though? What was? And I'm sure there were other you could have gone a number of places.
Yeah, honestly, I'd apply Apexanalytix kind of company values of hungry, humble, smart. And I would say that like to a T describes the vast majority of folks at Kellogg. And, I've now identified with that group a number of times. So hopefully it's true. But it's really down to earth group of people who are curious, collaborative, and that I think are very easy to get along with. So it was more of there's not a lot of sharp elbows running around at Kellogg. I would say everyone's there to kind of help each other win.
Where do you think you sort of validated your credentials as a finance executive, though? It seems like you were confident. Once you got out of Kellogg, you were confident finance would be your lane. Is that right?
Yeah, that's correct. I just kind of fell in love with finance as a function, using, like I said, using data and financial information to make strategic decisions for a business. And I like that intersection of strategy and finance that is required in that corporate development function. That opportunity to think about how do you create enterprise value inorganically through M&A, but then that becomes your organic growth in the future. You only get credit for that inorganic growth, and you got to quickly pivot to how that's going to create long-term lasting value for the company. And I love that, thinking through that, but also how do you structure a transaction that's accretive to the company as soon as possible. And depending on what market you're playing in, you have to think of that in different lenses over different time frames. So super interesting space to me.
Your first CFO door, it swings open at a company called SpendHQ. And I'm just curious, have you relied up to that point on executive search folks? Are they helping you find your opportunities? Is it your network? It could be a little of both. What would you tell us?
Yeah. No, I definitely met some executive recruiters along the way. The SpendHQ opportunity came to me via Kellogg classmate, who actually was a partner at Pamplico Capital, which owns SpendHQ. And so,
your network.
He and I connected. We both lived in Charlotte. He passed along this opportunity and asked me if I'd be interested in interviewing it. Jumped at the opportunity to kind of get my foot in the door in my first CFO role, and really grateful for that opportunity from that. Excellent.
Well, we probably will have some more career-related questions for you a little later. I think we do want to revisit some of your Army years. Such an interesting chapter we don't always see. Hey, but right now, let's find out about Apexanalytix. Again, this is your latest chapter. You only opened it up this past spring. Hey, what's this opportunity about? What's this company about?
Sure. Yeah. So Apexanalytix, we deliver enterprise risk resolution to the world's largest companies. So what does that mean? I think as succinctly as I can put it is we help companies find millions of dollars underneath their couch cushions and help CFOs sleep at night about their supply chain. So, we kind of help companies with the entire supplier lifecycle. So from kind of autonomous onboarding to supplier compliance verifications, continuous supplier risk management, and then, like I described, the recovery of funds that are owed to our customers. So, we have software that detects and recovers, prevents overpayment of vendors, fraudulent bank transactions, and really just allow our CFOs, which is, our primary audits along with chief procurement officers, to help bring money back to their companies and have more meaningful relationships with their supplier base.
Can you tell us something about its capital structure, maybe an abbreviated history?
Sure. Apexanalytix was founded about 30 years ago. It started out as a accounts payable recovery audit business. So again, doing a kind of manual audit of our customers' financial statements to go recover money from their vendors that had been overpaid. and it evolved into a software company, and built software that did that auto detection and helped manage that recovery process for our customers. But then we kind of opened up the aperture to, a more comprehensive view of supplier risk management. So not just that kind of transaction based, but, really we cover the 7 most meaningful areas of risk in the risk management space, whether that's kind of event monitoring, ESG, supplier performance, compliance, cyber risk, and then again, that financial risk. And so today, that's why, kind of how we've evolved into that end-to-end supplier lifecycle management solution. Our capital structure, we're private equity owned by KKR. We're the third they're the third private equity company that's been an owner of Apexanalytix. And so they're our majority shareholder at this point. We have another, which is our previous private equity owner, Carousel Capital, who's still a minority owner. And then the rest is kind of the management team. But as you can imagine, in a leveraged buyout, we're have a pretty efficient balance sheet. So we're, using debt to help fuel our growth, and the company is, done an outstanding job on the profitability side over time, and so we feel really good about managing that debt and being able to that drive efficiency in the balance sheet that way.
So I didn't realize the company is 2 decades old. That's interesting, and now it's intersecting this world of AI. So I'm curious, and it might seem obvious, but it would be great to have you explain a little for us. Why is AI and analytics so central to navigating rising procurement workloads? Let's say.
Sure. AI is obviously the huge topic right now, and everyone's trying to figure out where you play in that ecosystem, what's real, what's marketing, and the way that the viewpoint that we've taken on AI, I'd say we've taken a really unique perspective and strategy on how we built our company's technology infrastructure. So we have our own native data centers, and all of our servers are on-premise, which is very countercultural to most software companies that are kind of using cloud vendors to store all their customers' data. We're storing it all on our own servers, so that way our customers' data never leaves our Apexanalytix operating system, which not many software companies can claim. And we do that, because we're a risk management company. So we have our customer first in mind there. And so what that allows us to do in the AI space is actually deliver agentic solutions that maintain the security of our customers' data without having to, go outside our own ecosystem. So many of the, world's largest companies are very nervous for obvious reasons about their data getting into the wrong hands and becoming very public. And so we give our customers a really outstanding sense of security in that regard with the way that we've formulated our technology infrastructure. But specifically what we're doing for our companies, for our customers, is we're building customizable agents to allow them to connect really with any third-party system that they use, whether that's their ERP system, their help desk ticketing, and to be able to ensure accuracy and eliminate and resolve risk across their organization. So, for instance, one of our customers right now, we're building an agent that will take a help desk ticket through ServiceNow, and then the agent will then go into their ERP system. They'll find the data, resolve the question, and determine what's the right path to then to resolve that ticket, whether it's communicating then with the P2P system, coming back, So that's the kind of solution that that we have live for our customer base right now. And so that's something that certainly is on our growth horizon.
We have to believe that, a big part of your role going forward will be evaluating more closely your AI investments. And we're wondering, how do you evaluate those investments from a, financial ROI standpoint? What is it, the criteria that you expect to use? Given you arrived last May, so you're already eyeballing some of these investments being made. What would you tell us?
Yeah, no, that's something I had to do pretty immediately coming up on Apexanalytix. So, we've put meaningful capital behind our AI infrastructure. And we do that for a number of reasons. One, because we have our IT infrastructure on-prem, we need to have redundancy to be able to continue to deliver our solutions. And one, we are building additional products for our customers, like I described. That's not the only one I described, which is kind of that agentic risk remediation solution, but helping our customers natively speak on our app through a chatbot, part of the process. So there's revenue attached to those investments, but there's also efficiency to be gained. We estimate that we can really increase our development capacity by like 40% using some of this agentic AI platforms. And so investment both on a hardware and a software platform allows us to just come to market with our product roadmap much quicker. And so one, we can do it more efficiently from a cost perspective when we have that horsepower behind us, but we also have speed to market, which gets revenue in the door faster. And so we're taking a very disciplined ROI-based approach to that investment because they're large investments and you need to be prudent about and realistic and hold yourself accountable to the returns that are going to come in the door from those investments.
What about the finance function itself? Do you feel it's leveraging AI? Is it where it needs to be? Are there initiatives that you expect to help champion AI related going forward to help finance operate more effectively, efficiently, whatever it might be?
Sure. I think one of the roles of the CFO that is growing is kind of serving as the internal chief data officer. Maybe not from a customer data perspective, although we're involved in that certainly. But making sure that we're leveraging our systems in a way that creates an opportunity for more informed and seamless decision making. So that's whether, that's across your CRM, your ERP, your other tools. Like, we need to make sure that we can quickly and confidently access our own data. And then where an AI solution could be helpful, make sure that we've structured that data in a way that we can then leverage that technology. So it's not, hey, we need to be doing AI. No, it's we have our data structured correctly and we're harnessing the already existing software tools in a way that then allows us to springboard forward by using an AI solution. So that's the approach that we're taking and actively leading within Apexanalytix.
As a CFO who has certainly some corporate development bona fides on their resume, is acquisitions going to be part of the growth trajectory for this company?
Definitely. We see opportunities, particularly in the risk management space, which is where our company is, growing the fastest, and we're kind of a newer entrant into that space. While we have a comprehensive solution, there's other ways that we can continue to bolster the product suite. And so, we're spending some time building out requirements and criteria for our investment, whether that be on the qualitative or the quantitative side, and then building out a pipeline. The company's made 2 investments within the past 3 years. One on the cyber risk space and one on the sustainability risk space, and that's been successful and been able to really integrate those into our platform well. And so, with the success of those, we see more M&A in the future for sure.
Do you think AI is going to impact the best practices that you use to evaluate acquisitions? We've been having this discussion only recently, but it's interesting how AI can spin up opportunities in ways we never imagined just 10 years ago. So how is AI, do you think it's going to change how you approach M&A?
What won't change is the requirement to have a good strategy of why you're going to do M&A. Because many acquisitions don't work for various reasons. And you've got to ensure that your strategy for growing your company and allocating capital to inorganic means is going to continue to drive the highest return on capital that you can do. And inorganic growth is more expensive most typically than organic growth. So I think going into putting a prompt in, hey, build me a pipeline of companies I should go acquire is potentially introduced to some risk that you don't want into your business if you go and trust that. However, what I would say is that using the modeling capabilities of a large language model to help you think through scenario planning, to think through ways to create value between a combination of certain companies to help inform that strategy is definitely a way that you can use AI. I do think that a lot of the firms that do due diligence around acquisitions are already leveraging AI, whether that be running through financial due diligence, legal due diligence. Like there's a lot of speed and kind of 80-20 of the due diligence process that I think that AI can help as well. And so I think we'll see a lot more of that coming into play. But at the end of the day, I think humans are still going to be making investment decisions with the help of AI.
That's great. Well, we are going to move to what we refer to as our finance strategic moment question. Again, this could have been any time during your career, but what we're looking for is really just a good story about how finance plays a strategic role. What would you share with us, Chris?
Sure. I think an example that comes to mind, and this is more of a leadership example or a relationship example versus a hardcore financial principles example. But I think, as I mentioned before, like relationships as a CFO are almost one of your biggest assets. And so the story that comes to mind for me is during my time in corporate development, we were pursuing one of the larger kind of bolt-on acquisitions that the company had done. And we were in a banker-led process, so it was competitive. It was the company was based in Europe. We didn't really have a relationship with them. And they certainly were not coming into that process with us being the preferred buyer. Just didn't really know us. However, we had an investment strategy around their product and what it could do to enhance the broader suite of our existing product suite that felt squarely into our strategy. So this was right in the middle of COVID. The world was not traveling at the time, but we made a decision to go fly and meet the founder, tour the facility. Everyone else was doing remote due diligence, but we felt like it was really important to go shake hands, start to build a relationship, and continue to do that through the process. And we really we really put forth a compelling story for the founder that, hey, we're not coming in to disrupt your company. We're gonna be a great home for the great organization that you've already built. And that strategy was successful. And we got back from our last trip, and the founder called my CEO and said, "Never would have thought I'd be selling the company to you, but I feel like you're the best home for what we built." And so I just feel like that relationships in finance sometimes go underappreciated or unmentioned, and that building those relationships over time can meaningfully alter the outcome of the enterprise. And so as I think about my role now, I think it's paramount for me to build really strong relationships across our executive team, not just with my CEO, with our business presidents, with our CRO, our chief growth officer, and deep down into the organization, so that as the person responsible for stewarding the capital of the company, I can have those relationships built and leverage our entire team's knowledge base to help inform that decision making, so that we're not thinking in a silo, putting a model together and saying, well, this should be the outcome. No, it's tested. It's been beaten up by all of my peers. And I really think that leads to better outcomes. And so I'm certainly focused on the technical and, fundamentals of finance and maximizing ROIC for decision making. I think having really strong relationships like the one that we were able to build with that acquisition target are going to lead to more success over time.
Excellent. Thank you for that. We'll jump to our mentoring round, where we're going to ask you to look back again. We were interested in that first CFO tour of duty that you had, that first 90 days there. You're still in your first 100 days here, perhaps. But the first time you became a CFO and all the responsibility, if you could go back in time and tell yourself, what is the piece of information you might have told yourself that first 90 days? Something you were missing, maybe. What is it?
I think it'd be just to trust in your capabilities and trust in the perspective that you're bringing to the table. No one's ever been a CFO before they're a CFO. And I had a decade of finance experience that didn't include the letters CFO in my title, that were very additive to exactly what I was asked to do in the first 90 days, which was come in, get a really strong hold on what's going on in the business, perform a budget from scratch, build the company model, and help allocate resources for the next 12 months. And so having done that numerous times within corporate development, when I'm putting together an investment plan, and then communicated that plan to the market in investor relations, I then needed to, with the leadership team, build a budget and communicate that to our private equity owner. And so, I was nervous about that. But I think just trusting and leveraging the experience that I had, I was able to, really help deliver a good outcome for the leadership team as we went to the board for approval for that. So that's what I'd say, is just trust your experience.
Yep. Great insight there for us. Thank you for that. We want to ask you to reflect a little on the personal side for us. You haven't been there very long, so chances are your colleagues might not know this about you. What is it? Something from your past, a pursuit, an interest, something maybe most people don't know about you. Anything?
Sure. I think I've had, just by being in the Army, some really unique experiences. Um, and so this is more of a fun fact, but one of my last roles in the Army, I led the U.S. Army drill team, which is it's kind of a showcase element for the Army that travels all over and does this precision rifle drill. I was usually the guinea pig standing in the middle with rifles flying all around me because I was the officer. So I was not the talented one spinning the rifles, but we had this unique opportunity to go perform for Queen Elizabeth II in London at Buckingham Palace. And so kind of afterwards, I got to meet her, shake her hand, and we had tea in the barracks next door with our whole unit. So certainly a once in a lifetime experience. Certainly not anything I ever thought I would be doing as an infantry officer in the Army, but there's so many unique opportunities that military service provides like that, and almost every one of my friends has one like that. So just really grateful for that time of my life.
I have to mention that as we began our discussion, and I asked you to reflect on, of course, your Army years, you said something that even in my mind, it seems almost cinematic. We've seen it. Those of us who watch Army movies or what have you. The colonel with all that experience and this young American face showing up and having to build a relationship or try to understand each other's selves. Can't begin to understand what you might have been able to even convince or it may be impactful in that situation. Throw up your hands and say, well, what else can we do? What did you do?
I think you had to be successful. You had to take a mindset that he was your customer, and that it was his country. He was also defending it, and he certainly had needs. And I was there to help him achieve what he was trying to do for his unit with the numerous assets that the United States had at its disposal. And so just talking to him about what his needs were, how that aligned with our strategy for what we were trying to do, which was build stability and security in Iraq. And being a partner to him versus a prescriptive, trying to prescribe to him an outcome or a process, or acting like I knew more about what he was trying to do and where he lived was that was the approach that needed to happen. So I felt like we were able to be successful. Just kind of having a more servant-oriented mindset and demanding a level of respect from our team for theirs. And that led to a really strong partnership.
Well, thank you for reflecting some more on that for us. Wondering if there's a resource you'd recommend, whether it's a book or some other information offering that you've come to influence your thinking over time, perhaps. Anything, book or a resource?
And I'd offer two books. Well, first is a just fantastic leadership book called Once an Eagle by Anton Myrer. It was written back in right after World War II. And just a fantastic comparison between what true servant leadership looks like. And then the second book, I really learned a lot from this gentleman. His name's David Giroux. He's at T. Rowe Price, and he wrote a book called Capital Allocation. And to me, that's the kind of, it's been just a great framework for me to think through how to prioritize projects based on return on capital, whether that be organic growth, inorganic growth, for a public company, dividends, share buybacks, all of that. So really fantastic book in my opinion.
Excellent choices for us, and we, for some reason, haven't had them, particularly the T. Rowe Price as well. I mean, so related to finance, we haven't heard it before mentioned. So thank you for those, Chris. We are up to our final question. We're going to ask you to look forward, finally. And what we want to know are, what are your priorities for the coming 12 months as CFO?
Yeah, again, comes down to capital allocation. We've got a number of growth levers here at Apexanalytix, whether that be, building our risk management solution out with AI, whether that be acquisitions, whether that be investing in infrastructure, organic growth, growing our team. So it's, thinking through how do we, leverage the data that we have, and how do we better serve our customers with that? And so really it's, for me, the top priority is allocating capital effectively. And so we are building a process across our leadership team to prioritize all of those projects and look at them from an ROI-based lens, and have really rigorous discussion about how we want to use those investment dollars because they're finite. And so I really look forward to that. It's a really exciting part of my job. I'm also really excited about the kind of technology transformation that we're doing, and really kind of optimizing this technology stack like I was talking about. And so I'd say those are the top two things that I'm really focused on in the next 12 months.
Chris Miorin, thank you for joining us on CFO Thought Leader.
Thanks, Jack. Really appreciate the conversation.